Hi everybody, Alex here from Expert Forex, and in today's video we're going to talk about the simple and easy ways of identifying turning points. Now this is a free download. It's an ebook course which covers the main methods of finding turning points. It complements the previous ebook that we've sent out last week called the 7 simple and easy ways to enter. So finding the turning points is a more specialized entry procedure. Let's have a look at the contents of this particular course. First of all, we have a look at what moves the market. When the price is moving up quite strongly, it takes considerable energy for the market to stop the price firstly and then to reverse it. So there's a lot of market dynamics and price action that is needed to create a turning point in the market. So the course goes into that area in some detail. It also looks at why you should be trading turning points and what the complications are of trading turning points. The meat of the turning point course is the 7 methods used to identify turning points. Now the first one is an unusual one. It's volume. A lot of people don't use volume when trading, but volume is a good indicator if there's going to be a turning point in the market, and that is explained in the course. We then look at momentum. Now momentum is when you're using something like the MACD or the stochastic or the RSI to determine turning points in the market. Another method to find turning points. The next one is candle formations. Now candle formations have been around for a very long time and are pretty established and pretty robust in terms of giving signals for reversing price action. Then the most important from my perspective is support and resistance. And I call some of the signals visual signals because you can actually see price levels where the price is being rejected or can't break through, and therefore I call those visual support and resistance. Now they don't need to be horizontal, they can also be vertical support and resistance. The next one is the calculated support and resistance levels, where you would use Fibonacci or pivot points or round numbers to determine possible areas of support and resistance. So they're not visual, they're calculated areas of support and resistance. We then move on to exhaustion levels. Every currency has a rhythm where it goes up and down, and you can use that rhythm to determine exhaustion points and turning points in the market. And then lastly, for day traders, the time of day is pretty important. The price action that surrounds the open of the Asian market, the UK market, the US market, the close of the UK market, the close of the US market are all quite unique times that can trigger reversals in the market, in other words turning. So I'm sure you'll find some information in this course that you might find valuable and that can add to your Forex trading experience. So please download this course. I hope you enjoy the course. From me, Alex, cheerio.